Hi, I'm Jimmy. In this video, we're looking at the AT&T spinoff of their WarnerMedia business, and is AT&T stock worth investing in today? We're going to look quickly at some of the terms that have recently come out for their spinoff, as well as the AT&T dividend, and ultimately the fair value of AT&T stock to see if AT&T is worth investing in today. Now, AT&T is actually a stock that I personally own, and I found it using our discounted cash flow calculator that we're in the middle of building. So I just want to take a quick second to introduce that to you. So this is our investing calculator for using discounted cash flow. And basically what we do here is we take analyst estimates. We can see that we have a decent number of analyst estimates that are projecting free cash flow for AT&T going out the next few years. And we're getting, using a 7.5% required rate of return, we're getting a fair value of about $28 per share. Right now, the stock is trading closer to $23 per share, so it looks like there could be some upside. Now, one of the reasons we're building this investing calculator is that it allows us to quickly enter in tickers. So, for example, if we were to punch in the ticker MSFT, well, we can come up with the fair value for that stock real quick. What is what is their fair value? We punch that in. What about a stock like Home Depot or a stock like Lowe's? That's one of the advantages of this type of website. Now, we're planning on this website should be up and running for the discounted cash flow calculator by the end of the second quarter of this year. If you'd like to sign up to get access to this website, I will leave a link in the description below for how to sign up. And the advantage of signing up now is if you sign up now, you get access to our private investing community, and we lock in your price. The price will never go up on you. So if you sign up today, we're going to lock that in. The website should be up and running shortly. In the meantime, let's now jump over to AT&T, our AT&T analysis on the recent news that's come out about their WarnerMedia business. Okay, now the basic terms of the deal we can see right here. And this was announced like last year. And basically what's going to happen is AT&T is going to spin off 100% of their WarnerMedia business. In return, they're spinning it off and merging the WarnerMedia business with Discovery, which is already publicly traded. In return, the investors in AT&T stock they're going to own 71% of the new company. The Discovery shareholders are getting the other 29%. Then they also announced their cash dividend, but we're going to come back to that in a second. For now, let's look at their stock dividend. So the big announcement was that the stock dividend, the record date is April 5th. Now, usually before the record date, you're going to have an ex-dividend date. This is going to act the exact same way. So it's really April, probably 4th. But basically what will happen is by the end of April, when the deal closes, well, we will get, for every one share of AT&T that we own, we will get 0.24 shares of Discovery. So we will keep our one share of AT&T and we will get 0.24 shares of Discovery. Now, the key to this is to recognize that when there's a spinoff like this, it is exactly what it sounds like. They are spinning off a piece of the business. This is not something that creates value. It is a spinoff of value. So AT&T stock is going to drop. In theory, that is replaced by the value of the WarnerMedia Discovery business. So in theory, we should end up about the same. We'll just own two different companies. But for now, let's look a little bit closer at the time, the transaction period from our April 5th date, which is the record date, to the actual close where it's expected to be closed at the end of April. Now, where generally dividends are a taxable event, AT&T has actually set up this transaction that this is going to be tax-free. So we're going to receive shares of the WarnerMedia business, but not get taxed on it. Okay, now let's jump into a quick example of how this is going to work and what some of our choices might be. So this example is going to assume that we bought the shares. We own these shares already. Now let's pretend we own 100 shares and we owned it before the record date of April 5th. So now we hit the transition period. Now the transition period is a little bit complicated because from the time where you are considered a shareholder, where you go on record, which is April 5th, to when the deal closes, which the official date hasn't been announced yet. So it's end of April-ish. It's really sort of the end of April, but we don't know the exact day. But there's going to be a couple weeks there where there's going to be a transition period. So you can, if you want, if you already own the shares, this whole scenario assumes that we already own the shares. We own 100 shares. Well, once the transition period begins, well, now we have our 100 shares. We also have the rights to 24 shares of WarnerMedia Discovery. I believe the ticker is going to be WBD. So if we want, at any point during this transition period, we can opt to sell our shares of AT&T. Or we could sell our shares, our rights to the WarnerMedia Discovery. So we could sell either one. We could sell both. We could keep all of them. So obviously we have a few different choices here, but I think it's very important for people to recognize that if you own the shares of AT&T and you got the WarnerMedia business and you didn't want it, that will be tickerized, which will mean basically that you'll have a special ticker. You should see it in your brokerage account. If not, you should be able to contact your broker and ask them what the ticker is. But you can sell your rights to, let's say, the WarnerMedia business. I want nothing to do with the WarnerMedia business. I want to sell that, and maybe you just want to buy more AT&T shares. Or maybe you really like the WarnerMedia business. You want to sell the AT&T shares, buy more WarnerMedia. You could do that as well. You can do any combination of that. But here's an important part. If you sell your AT&T shares like you normally would today, if you jumped on your brokerage account and you sold your shares of AT&T, if you do that while in that transition period, you will sell your shares of AT&T and you will sell your rights to AT&T, to WarnerMedia Discovery. So you have to trade. If you want to just sell one piece of it, you have to be very careful with how you sell it. Again, there's going to be a ticker assigned to each one. All of that should be listed in your brokerage account. Then once the deal ends, once the deal is officially closed by the end of April, well, now you will own shares of AT&T. You will own shares of Discovery or WarnerMedia Discovery. So essentially, they're just sort of giving you another position. But like I mentioned in the beginning or earlier on, odds are the stock of AT&T stock price is going to drop by somewhere near the equivalent value of the Discovery deal. Now, of course, there's that transition period. In that time period, these stocks are trading, so there's going to be some movement. Okay, so that's the AT&T stock dividend. Now let's jump real quick back to their cash dividend. So we can see that their most recent announcement, they announced a cash dividend of about 28 cents per share. Now, on an annual basis, they pay 28 cents now every quarter. So on an annualized basis, that's about $1.11 per share each year. If we divide that by the current stock price of a little over $23 per share, we get a dividend yield of about 4 or 5%. Now, like I said, when the stock dividend happens and the stock price drops because they're spinning off the WarnerMedia business, the stock price will be lower. So if the stock drops down to, let's say, the $20 range, well, now the dividend is suddenly in the 5 or 6% range. So this dividend has historically or recently, it has appeared like the dividend yield for AT&T stock is about 8%. That's not going to be the case. It's going to be much closer to the 5 or 6% range. So if we are a dividend investor, this could still be a decent dividend yielding stock, but it's not quite as high as people thought it was, as it was before, or as it has appeared to be. Now, I would expect for their dividend to remain in this level, possibly increase it on an annual basis like they were doing beforehand. And from an investment standpoint, I personally have no intention of selling my shares of AT&T stock. One of the reasons I had bought my shares is that I bought them because I wanted a piece of the WarnerMedia Discovery business, which I think independently, yes, when the spinoff first happens, they might be, let's say it's about the same in value, but I think that the WarnerMedia Discovery business has a chance to get priced much higher going forward. Plus, I think a slimmer, sleeker version of the WarnerMedia business, of the core AT&T business, could do quite well. Now, AT&T stock does have about $200 billion in debt. AT&T has a ton of debt tied to them, but they got about a little over $40 billion is going into this WarnerMedia business. Now, they're not sure how it's going to happen. That I'm still waiting to see. There's rumors of it being cash or rumors of it being perhaps the WarnerMedia business takes some of the debt, probably a combo of the two. so their debt should be reduced somewhat. I think overall, this is a good stock to own. This is a stock that I own. It's a company that I'm happy with, and I think I like the moves that they're making, and I'm very happy to hold this stock long term. Now, if you'd like to sign up for a discounted cash flow calculator, I will leave a link in the description below. And again, we're locking in the price. If you'd like to sign up, I'll leave a link in the description below, link over here. Thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thank you, and I'll see you in the next video.